As soon as you turn, what will happen? It will open and you enter. So some companies are not present in Nigeria, but they can come and provide contract of installation, contract of delivery, contract of. So some of these, like in the area of this IPP, Independent Power Project in Mambila, federal government contracted a company to come and install one machinery that they bought abroad. So we don't have the expertise. So that company that they came and to do that installation, the amount they earn in Nigeria is taxable. Or the last one is when they have an independent agent that dependent on them to supply goods from abroad. He will sell, he will take his commission and this and he will remit the money. So in that situation, company will be taxable under these four activities. But if you look at digital transactions, we'll be buying online, more especially ladies, madam. Yes, some of them will buy online. They will see a fine shoe, fine bag, fine jelly, fine product like that. They will make purchases. So any company that is not in Nigeria and they provided digital services, Nigerian patronized them and they got 25 million per annum, that company is chargeable to tax in Nigeria. Or the company is not in Nigeria, but they provided their domain that ended with .ng. Anywhere you see .ng, Nigeria has that ownership. Be it in US, be it in UK, be it in South Africa, be it in Niger. Any domain that ended with .ng, that domain belongs to Nigeria. So a company that is in Cameroon, if they open a domain .ng and they sell product, any amount they sell through that domain is chargeable to tax in Nigeria. Yes. So that's the concept of significant economic presence. Or some companies they want to do like in China, we have a lot of our Nigerians that are going to buy to make some purchases in China. Or take for instance Turkey. I was in Turkey, in Istanbul, I think in January. I went for some visitation to relax because this Nigeria. When you get more money, you just Japan, you just go spend some time. Come back. When you come back, you start at So there's a lot of our Nigerians going to Turkey and do import. So any company that is not resident in Nigeria, but he opened their own website and display product in Naira, Naira sign N, and they put two lines. Meaning that they want Nigerians to see, they want Nigerians to come and buy. Whether Nigerians that live in that country or they are from Nigeria. So because that Naira belongs to Nigeria. So it's our own copyright. So that transaction is subject to tax. So the significant economic presence is a concept that was introduced in 2019 Another one is the issue of carrying forward losses independently for insurance companies. Yes. We say what is good for Bala is good for Bulus. If you give Taye some money, give Taye in there also. Yes. In my own language, we have Asana and Hussein. So all companies are having their carry forward of losses independently. But changes in company contract 2011 do not amend section 16 of the CETA, meaning that insurance company might not carry their losses more than 4 years. Yes, 4 years was the target before. So this finance act now has amended. Okay, other companies are carrying forward their losses. Insurance company go and carry forward their losses also. So it has aligned with the provision of the company contract. These are these other companies. Then also we have the issue of minimum tax. Yes, minimum tax now is what? Is a rate now. 0.05% of gross turnover less frank investment income. That's the minimum tax. Gross turnover less frank investment income. That's the minimum tax. I think everybody can even put it in the set. But before computation of minimum tax has some accounting charges. Yes. What is the rate? Lecture. 0.5% of gross profit, 0.5% of head of capital, 0.25% of what? Tell me now. 0.25% of what? Net assets and 0.25% of next 500,000 of the turnover. If a company is having higher than 500,000 turnover, is what? 0.125%. So this computation, even we in our office, some of myself, they are not accounting graduates, so they find it difficult. And small mistake, you could add taxes to the tax or you unite government taxes. Yes. And also another point of it is that what if companies are making losses? They don't have turnover. As long as you will tax them based on their paid of capital. And if companies do not make profit and you tax it based on their paid of capital, meaning that government is eroding their share capital base. Yes, that's the implication. When you erode the share capital base of a company, they will not have working capital. You know the implication. When a company doesn't have working capital, then they have too much burden of debt. They'll go and be borrowing. Too much borrowing will create good companies. So government now abolish that accounting jargon and introduce 0.5% of gross profit, less frank investment income. What is frank investment income? Dividend, interest, rent that suffer taxes. Let's for instance, Madam own a company, ABC Nigeria Limited. I'm a shareholder. I invested 1 billion. At the end of the day, they now allow them that they are my children. Now I'm a village man, they come to greet me. And I'm a chicken. So at the end of the year, you know this company ABC Limited will declare profit, right? Yes. When they declare profit, what is expected of them? They will pay tax first. It's net profit after tax that they will not distribute part of dividend. Before they give me that dividend, they will deduct how much? 10%. Now the rate has been reduced. Yes. So when they deducted 10%, meaning that dividend that come to my hand it has suffered two taxes. Yes. Company income tax in ABC Limited and withholding tax 10%. So any income that suffered two taxes is called prime investment income. So when you are computing the minimum tax, if there's any income from that company that suffered that two taxes, then you are not going to use it. Then we have graduated CRT rate. Yes, like I said, it's an incentive. Any company that earns turnover of 25 million and above, they are going to pay zero taxes. That type of company is called small companies. Companies above 25 million and lower than 100 million turnover is called medium company and they have to pay 20%. Then 100 million and above, they are called large or big companies and they have to pay 30%. So now we have graduated CRT rate. So CRT rate, company income tax rate is not only 30% now. If they ask you in a forum or in a particular place, how many CRT rates do you have in Nigeria? 3, 0%, 20%, and 30%. It depends on the turnover. Then the CRT bonus. This is the area whereby tax consultants need to advise their company. As soon as their accounting year end finish, let them go and file their return on good time. 3 months after accounting year end, if a company is having 31st December as their accounting year end, and they file their return on or before 31st March, they are going to have a bonus. For medium companies, they have 2% bonus. If they have to pay 1 million, so 2% of that should be credited to them next year as a bonus. For large companies, a bonus of 1%. Yes, any company that is having a turnover of 100 million and above. Yes, in my office or in my some of the taxes under my jurisdiction, there are some that pay almost 50 billion turnover taxes. I mean, 30 billion, 15 billion, 3 billion, 5 billion. Take for instance, 1% of 5 billion, how much? It's a big money, around 50 billion. It's a saving. So that bonus should be used again next year. If they have a bonus of 1% this year of 50 million, that 50 million should be credited in their account. If they are expected to pay 1 billion next year, they say 1 billion minus 50 million of this year. So they'll pay 950 million in taxes. So CRT bonus is some of the area that consultants need to advise their company. Do quick and file your return. This small amount, when you get it, to improve your working capital. So in doing that, you two are killing two birds with one stone. Meaning that you make the company to call you to offer your service. Quickly you raise your own fees. Yes, this is the item schedule of you. You talk, agree. Quick. Before I come, give me 50%. So you too, something will enter your pocket. But some companies don't what is there? By the way, after accounting year, I will pay less than 10%, I will pay this. Forget it, Janet. You too, you sit down in your office doing nothing. So advise them ahead of time. Like this CIT bonus is good for you when you file your return 3 months after your accounting year end. Then there's no payment for pre-operational levy. Yes, before companies register with corporate affairs commission and they are yet to start business, they are expected to pay some amount. So now it has been abolished. by the Finance Act 2019, and also tax payment on interim dividend. If you discover that a lot of funds, if they are paying interim dividend, unless if they wanted to deduct, if not, taxes have been waived until they are making final payment of dividend. So no payment of tax on interim dividend. I think we also talk about that withholding tax of 10% is payable as a final tax for technical services to a non-resident company who has a fixed rate in Nigeria. Any company that does not have a fixed rate and be provided technical service in the country. Most of these companies that we have here, that they have parent companies, Julius Vega, CCECC, a lot of companies that have parent companies abroad. So when the parent company provides technical services to their subsidiaries here, the 10% should be deducted on the amount payable to them as a final tax, because they are not registered for tax in Nigeria. Then there's limitation of allowable deduction up to 30% of earning before interest, tax, depreciation, and amortization. Yes, this is a ceiling, this is a caveat. That is, company should not take too much loan. Too much loan on the company will make them very, very highly geared. When a company is highly geared, they are going to pay too much interest. So some company deliberately, you see their share capital just 1 million, but debt, long-term debt, 1 billion. You cannot do anything to them. But this one has introduced a caveat. Maximum that they are going to allow to be charged at tax is only 30%. If they borrow, and their interest payable in that year is 100 million, then we are going to come back and now recompute their account and adjust it. What is 30% of this interest before earning EBITDA and depreciation and amortization? If the total computation is 70 million and the interest in that year is 100 million, total from all sources, we only allow them 70 million. That 30 million will be carried forward to the next year. Then as at 2019, there's a reduced rate of withholding tax from 5% to 2.5%. There's amendment of tax schedule on taxes on interest and foreign loan. Let's look at value-added tax. Yes, very important. We have some changes under the value-added tax. We already know that tax VAT rate has been increased from 5% to 7.5%. Also, returns, invoice, and VAT payment for small companies are exempted from VAT. Any company that is having 25 million and below, they are not expected to file VAT return. They are not expected to pay any VAT. So it's a way of encouraging small companies to boost out their operation. Then there is concept of self-charge provision. Very, very important for consultant and tax student here. Self-charge. Self-charge. Yes. Madam own a company, ABC. Madam, do you have a company? ABC Nigerian Limited. Yes. ABC Nigerian. I'm a supplier. I do supply some items to her. So I now raise an invoice. Because me and her, we went to a bit tax. No, don't go and put VAT on top of that invoice. Because some companies are doing like that. They don't want to pay the VAT. Because the VAT is on her. Any transaction that is battable is the company that will suffer it. Yes. So I want to make a supply, battable supply now, 1 million. I'll just put an invoice. Supply of granite, supply of standards, supply of furniture and fitting, 1 million. I'll give her the invoice. Is expected to pay me my 1 million, I'll just work out. So now it's not business as usual. What this concept is saying that self-charge, the duty on her fall on her to deduct the VAT on the 1 million, 7.5%, 75,000 to remit to government, because I failed to include it in the invoice. And he's the one that is going to make the payment to me. That's the concept of self-charge. Anytime somebody brings an invoice to you as a company, as an enterprise, and an individual, and that transaction is VATable, and the person failed to add VAT on the invoice. So you, the owner of that product, or the one that want to make that payment, you have the right now to add the VAT and remit to government. Failure to do that, if you are checking her account, the book of the company DC Limited, and we discover the invoice, they didn't add VAT on it, then we make her to pay the 75 million, you pay penalty, you pay interest at 32.75%, and if convicted, you go to jail up to 3 years. That's the provision of Section 40 of the FRS Establishment Act. So the concept of safe charge now has brought in a lot of tax evasion made between two individuals or between companies. Most special companies that are sister companies, they will just say, send me the bill of the material bonbon jari, which bad. Usually we are all together. Yes. So safe charge is something that we need to pronounce it, we need to say it to our own customers and our clients. Now also, VAT return are to be rendered on cash basis. Very important now. Yes. VAT return is on cash basis. I supplied invoice to our company, 1 million. I added VAT, 75,000. Total amount on the invoice should be 1,075,000. So before, if I gave out that invoice, you have the duty to remit that VAT in that month. He has not made payment to me. Then we agree payment should come next month. Payment should come in installment. But the honor is on her to deduct the VAT and remit. No payment was not effected. So Finanza has changed that narrative that payment of VAT, rendering of return of VAT should be on cash basis. Is there any payment that you made this month based on the purchases, based on the invoices that are VATable? It's only that one that you are going to file it as in your return. Any invoice that you did not pay is unpaid. You keep it as VAT payable. So you are expected to report it under the current liabilities each week, each month, until you settle the amount. The definition of good and service has been expanded to cover all forms of supplies, tangible or intangible, except money and security. So ultimately, for all items are battable, except the one that were pronounced under Schedule 1 of the value added tax. Value added tax has only one schedule. Under one schedule, we have Part 1, Part 2, and Part 3. Part 1 is on what? Exempted good. Part 2 is on what? Exempted services. Part 3 is on what? Zero rated good and services. So we need to be familiar with that. The taxable person upon commencement of business must register with the service. All companies must register with the service under the value added tax. As soon as you start business, you must register with the Federal Revenue Service. Then let's look at CGT. What are some of the changes under CGT for individual? Compensation for loss of profit of up to 10 million is exempted. In the Principal Act, when an employee was disengaged, is expected to get an amount, 100 million or 200 million. Before, 100 million will be exempted from payment of CGT. Any amount above 100 million is chargeable under capital gain tax as 10%. The rate of capital gain tax is 10%. But now, Finanza has jacked that amount. If your company disengages you because you do some mago and they say, let's pity him and give you some amount. Not gratuity. Gratuity is different. Yes. Compensation for loss of profit. Something happened, two of you, mago, chop. At the end of the day, they call for investigation and they say, let's ask them some people. Please, tender mercy, man. Let them go. They just terminate their appointment and they give you 12 million. So 10 million will not be subject to tax under CGT. The 2 million, the employer should deduct 10% of it and remit to the appropriate state board of internal revenue. You know, the payee, the residency rule of payee is in the place where you reside. If you are a resident in Autaba Lady and you work in Abuja, you are paid, you should go to the state board of internal revenue. Then stamp duty, that's one off stamp duty. Any transaction of 10,000 and above, if you lodge in a bank or you withdraw, 15 naira will be deducted. Under Petroleum Profit Tax Act is only one single amendment under 2019, which allows for charge of withholding tax to individual and company. Before, oil and gas companies do not deduct withholding tax if they declare dividend. Other companies will make mention of it that if they declare dividend, they will pay you as individual. They will deduct what withholding tax. That's why that dividend is called prime investment income. Because it's all these are organs, past president, past senators, past all these manya in the country. They are the ones that own all these oil companies, etc. They carved it out that dividend declared by oil and gas company. No withholding tax. But this one now has introduced it. Yes, I made mention in tax, there is concept of pianist. Yes, that's one of the 4 cardinal points of taxation as advanced as Adam Smith in 1934. Yes, concept of fairness, concept of convenience. Yes, So fairness in the sense that other companies do not withhold. Why not company in oil and gas? Yes. That's why this one that introduced withholding tax. Anytime oil and gas company declare dividend, 10% should be deducted and remitted. If you look at it, that some of these big organs, they are the one that own these companies. Then we have amendment under company contacts. We made mention that's under 2020 finance act. We made mention of minimum tax. I think that's a caveat then. It was lowered because of the COVID-19, 0.25%. We are setting up to 34th December 2024. Then there's inclusion of definition of public character. Very, very important. Because some companies took FRS to court. Especially one school in Lagos, American International. They took FRS to court and they won. So they say their school is for public. They announced to public. There's one, they pay 10 million. There's two and there's three, around 12 to 15 million. There's it says 1, 2, 3, 4, up to around 18 million. And yet they call them they are for public. Everybody say no, you are doing business. They say no, we are not for public. So when they went to court, really they defeated FRS because in the Company Contacts Act there is no definition of what is public character. It was not defined. So now FINASA has defined public character. They say an inclusion of definition of public character where a company does not distribute or share its profit in any manner to members or its promoters. Yes. Any school established, any company established, whereby the promoters are not taking money, rather they are even pumping money. It's more about charity. Foundation, yes, they will not pay tax. But when the proprietors are taking money to go and enjoy abroad, when they are taking money to buy big motor, when they are taking money on monthly basis, who gets more this? I'm sweating here. Women, you get handkerchief. So if this company do not take any amount and give to promoter, then we can call that company or school as public character. Then donation for any pandemic should not be subject to 10% of accessory product will be allowed. But if the donation follow the wine test, only reason expensive and necessary. The small companies were saying that FRS are expected to provide guidelines. They are not expected to file company auditor account. So any statement of affairs as deemed by FRS, we can come and file. The payment of undisputed tax liability now is 30 days. Anytime you agree with any revenue authority, okay, you do come to my office. Those they drag their case. But this coming will come and collect your letter. As soon as we give you sign, you collect, you have 30 days. That is undisputed. Now, over 2 months.
Thank you, sir.
Now we have agreed.
Thank you, sir.
So the amount is undisputed now. So we are saying payment of undisputed tax liability should come within 30 days. Yes. Don't come and say, okay, give us it, we agree, we give you. Then you just go 60 days. After 30 days, you begin to count another penalty and interest. Then there's the replacement of agricultural trade or business with what? Primary agricultural production. Yes, when we look at it, a lot of businesses, a lot of companies, they are not really in agricultural production. Yes. You set up a company and you go and buy maize and supply to a company. Like the company we audited in just Grand Cereal. Yes, they have a lot of suppliers. They do go to villages and buy grains. They buy millet. They are not the real farmers. They are just middlemen. Yes. So this finance said that you must be doing primary agricultural production before you can enjoy any incentive provided by agricultural companies. Yes. Like one of the incentives under second schedule of CETA that talk about capital allowance. Paragraph 24, section 7, talk about restriction of the capital allowance. Should not be more than 2/3. That's 66/3 of the assessable profit. For who? For all companies. But companies that are into manufacturing, companies that are into agro-ally, like this one, and company now added by Finance Act, I think 2023, those that are in oil and gas, you cannot restrict their capital down. So this company that go and buy grain and supply to grain cereal or supply to company, they can't be called doing primary agricultural production. So whenever I was saying that, you are just middlemen. Or you are on to go and buy fish from those that have the fish farm. You go and supply it to hotels. Yes. I know one company that's their business. They buy fish and supply hotels. All these fun and kill joints in Abuja. Yes. So you are not in primary agricultural production. You are just buying and selling. So all these incentives that is expected to go for agricultural company, this company will not enjoy it. When we say withholding tax remain the final tax for management, consultancy, technical, and professional services. Companies engaged in utilization in downstream operation cannot claim the tax-free incentive. That is section 39 of company contracts. Yes. Companies that are into gas, utilization of gas in downstream. There's one company in Wari, about 2016. We went for their audit. Nigerian gas company, NGC, yes. They provide gas to the downstream. Before they will claim some relief, some incentive under section 39 of CETA. And yet they can still go back to IDITRA, Industrial Development Income Tax Relief Act of 1971. That's the act that gave tax credit to companies. So they'll go and take incentive under IDITRA, they'll come under company tax and claim another incentive. So come and look at it that these people that are enjoying two ways. So they say, okay, company engaged in this gas utilization in downstream operate cannot claim the tax-free period incentive under section 39 of CETA. While such company have already claimed any other incentive under any law. Yes. So if you claim under IDITRA, you cannot come under company contract. If you claim some incentive under petroleum property, you cannot come and claim here. Then we say courier services, email, and electronic means as a valid means of communication between FRS. Yes. Lo and behold, you find your return as a company, you provide email address and GSM number. If FRA look for you, they didn't see you, they'll just go and get your email and serve you a notice. Don't check your box in the next 1 year. If 30 days expire, that assessment has become valid and conclusive. So taxpayers, tax consultants need to educate their taxpayers. Let them provide valid means of email address or any other means, and be checking it from time to time. FRS does not need to come and talk to you now and talk to you physically, serve you an assessment. No. Now the company last week, we want to serve them in interim audit report. They are doing like that. I told myself, please come back. Yes, I have their email. You serve them. When they hear that, they quickly collect it. I say, when they come for concern, and me and them. So that's 2020 Finance Act. Under back, I think we have a lot of changes also. Like the one that suit me under 2020 Finance Act is the personal income tax amendment. Very, very important. Issue of commencement and cessation has been changed and aligned with the commencement under the company contract. When a business starts operation from date of commencement to the accounting year end, not to the year end now. Then a day after the accounting year end to the next accounting period. So that won't be overlapping, that won't be gap in their basic period. These are some of the stamp duties under the 2020 financial act. You can read that one. And some of the changes under the FRS establishment act. So I think we can take 2019 and 2020 for today. And we can pick another time to take 2021 finance act and 2023. You can read it ahead of time. If there's any questions, you can send to me during the day. If I reach out, you belong to the group. My wife, she does answer. Are you waiting for me?
Thank you so much, sir. We really appreciate your lecture, and we really enjoyed this session. I'm sure you all enjoyed it. Yes. So I don't know if anybody has any question you want to ask him. You can go ahead, please.
Thank you, sir. My name is Obeka. Welcome. Membership number 4962. I have some questions, especially in digital economy.
Yes, sir.
Like we know in physical economy, we know that withholding tax is between 5 to 10%. We are aware that the VAT rate is from previously it was 5% to now 7.5%.
Yeah.
And we are aware, based on what you just said, that the CIT is now graded 0, 20, and 30.
Yes, sir.
As related to the digital economy, what's the standard rate of their taxes? That is their CIT. That is one. We are aware of digital assets and services. That is digital goods and services. On a daily basis, we utilize them. And for the assets, we may be talking of some of them that are fixed, which may be attracting depreciation, or those that are services. Services are rendered. How are these assets tracked? And how effective is this digital economic transition? Because I was writing about digital economic transition into digital economy. I discovered that there are a lot of transactions that are not tracked and they are not taxed. Like on a daily basis, we buy data. Yeah. It's part of digital goods. We we lecture. You just be on your own. You'll be attending lectures online. It's part of digital services. So how is FIRS able to track and tax all these goods and services? I've asked about standard rates. I've talked about depreciation. Is it that the act doesn't recognize agribusiness because there's agro businesses? Because we do register companies or business names that they say they are into agro business. Agro business is like somebody who is rearing chicken, rearing and selling chicken. Can we classify such under agro business, or which? Because he's supposed to enjoy services and tax incentives because it's rendering agricultural business. So then, based on what you're saying now, that it is only the primary agriculture that is recognized. What about other people doing businesses? Like if we talk of traders that are trading on agricultural goods, you go to the farm, buy goods, and you sell. It's not a business that is into agriculture. So I think some of the questions, there are many other ones.
It's okay. That's a good one. Yes, thank you for this loaded. But I didn't know say we have a lot of digital students here. Like the first one that you asked, we made mention that the Finance Act 2019 brought in the concept of significant economic presence. Do you hear me now? Yes. Okay. So what we are saying that any company that earn 25 million and above in Nigeria, under company income tax, they are to pay the same rate of 20%. But if the turnover accumulated in the year and is 100 million and above, so shall it be 30% should be charged on them. And if they do not file their returns, then we can follow them and charge them based on turnover assessment. That's section 31. Yes, section 31 of CETA said that any company that do not file return, and we can make analysis of their revenue, then we can charge turnover assessment. That's deemed profit. 30% of that amount, then we now subject it to tax. So that's on the rate. They are not in Nigeria, they provide services digitally and they earn 25 million naira or its equivalent in foreign currency. So the same rate shall apply. Then the second question is on the digital transaction. Yes, really a lot of transactions are going on tax, but actually we have started it from 2019. And the two bodies that track transactions in Nigeria is CBN and Nigerian Communication Commission. Like on the issue of data, if you buy data, that data must belong to one telecommunication company or the other. MTN, Airtel, Glo, Which one again? Nine Mobile, Starcom. I saw a lot of these grounded, they came on an estate, a bus network, something. So if you buy data, is this company that will now recognize it? Yes. There's different way to recognize turnover of telecommunication company. It's not only when they issue the chat card. When they issue the chat card, they will deposit it under one account. When the recharge card was sold, they distributed to a retailer, they will be tracking it. When you as a taxpayer, as a customer, sorry, my mouth, don't turn to taxpayer. So when you as a customer bought the recharge card, yes, they will still move it from one account to another. It's when you started using it, you call somebody, hello, Aja, are you outside? I'll soon come and join you. So if I call her, I'm using my airtime. So that's the time that airtime will be recognized as turnover. Yes, as set. Also, if you buy data, there is data that is whether you use it, you didn't use it in the month that's expired. So after 1 month, they will recognize that they have earned that one. So under digital services, those that are using data, the revenue should be accounted by the company that provided that same services here. Any other question? Okay, agro business. That's very good. I think if you have copy of my presentation.
Yes.
You have copy.
Yes.
If you open CETA after we talk 2020 under CETA, the other side of the presentation, right hand side. Are you there? Replacement of agricultural trade for businesses with what? Primary agricultural production. What is primary agricultural production? Production of crops. Like me, I'm a farmer. I farm cassava. I farm millet. So if I sell that farm product, I must enjoy some of these items provided by the tax if I own a company. Or livestock. Livestock, those are real cow, those are real chicken, those are real fish, etc. They are under livestock. No, fishing is fishing. Livestock is those that get leg. Chicken, cow, turkey, etc. Or forestry, yes. There are those that have a plantation. I know a former governor in Yapo, in his state, he has a big plantation that he even used to export mango. Very, very sweet. They go to Brazil, they go to any different place and do cross breeding, man and woman, black and white. Before you know, they get a big mango. When you do fruit juice with them, if you are drinking, you think say you're there in California. Yes. So don't be that business of forestry. Any amount they cultivated, if it is a company, they enjoy all items provided by the tax law. So chicken is part of it. Incorporate a company, be doing chicken run, all the applicable incentives applied to this company will be given to them. Yes. Thank you very much.
Thank you so much, sir. Any other question?
Final question.
Sir, there's still something. Okay.
Yes, sir. Thank you.
Send it to me later.
Go ahead, sir.
Yes.
Go ahead, sir. Mr. Bade, let's move on.
My name is Leticia Akin. I want to do a little bit of digressing since you are tax expert. That's why I want to ask this question.
I'm a tax administrator.
Yes, as an expert.
If I cannot answer, I will get back to you.
So it's very unfortunate that in this part of the world we are not so bothered about tax credits. But I want to know what is IFRS doing in relation to tax credit, because this has always been an issue between the person that remitted it and the person that was supposed to enjoy the tax credit. For instance, if you go through your tax promax, when you are doing remittance on a monthly basis,
Yes.
that person is expected to get a tax credit from the other ends. But in this case, that communication is not coming the way it should come.
Yeah.
So what is the organization doing in respect of this to avoid all this back and front, and you deducted withholding tax from me and you are not remitting? It's not like you are remitting, but the other person from the other end is not getting the tax credit.
Yes, I think on the issue of tax credit, unfortunately, we all know that we're in Nigeria. then what is causing it is Nigerian factors. One of it is that some companies they have not updated their profile with FRS, with valid email address, etc. If you don't have valid email address, even if you deducted, the credit note will not come to you. Before we have a paper credit note, but now it's paperless. As soon as they deduct, you see it in your account. But if you have valid email address, sure, it will come to you. But another challenge is more officially companies that do businesses with government, Ministry of War, FCDA, etc. This MJ, they will deduct this credit note. They will deduct this withholding tax. They will keep it, they will see it in millions, 3 billion, 5 million, they'll just chop it. Yes, they will not remit. So our own is that it's when you see credit before you can give value to it. Yes. They say no more that part not have it below. You cannot give what you don't have. If you come to FRS and say, please, oh, I have credit, why is it? We check our system, we print web portal, we print tax pro. We didn't see, we can't give the value. But yet, FRS and other ministries were all under government. If there's synergy, if there's relationship, this one need to be ironed out. So our urgent task consultant and any forum, boss it out, which we are not happy. Like this, your company, yes. Let me even use it as an example, yes. So yeah, I'm not saying the name of the company. Just a case study, yes. Their own companies, they have credit note, which was deducted from CBN transaction. It's yet to reflect in FRS environment. So they have the printout, this is the deduction, they have the documentation. We have to send them to Revenue Accounting Department. Revenue Accounting Department will collect it, they will do their shakara, they will do their currency, they will do their abracadabra. Because they must call Ministry CBN, they must call Ministry of Finance, they must call GP, they must call this one. If there is nobody pushing, before you know it will take another 20 years. So we don't need to be doing that. The only thing that we are advocating is a seamless synchronization between GPMIS and tax formats. As soon as GPMIS deducted from contractor's name and amount and this, PM will come to us. If you cannot send it to us in the various taxpayers' account, send it in bulk and a schedule. Then the taxpayer should come forward. Please also I have this because I don't have valid email address. So it really is Nigerian factor. During the past chairman of FRS, he has met Athens, and I don't want to come and disclose here. Some of them there give me. I beg, don't go and say, Madam, are you recording? No. Okay. When you're lecturing, you have the right. No lecturer now. The mic, off the mic. Off the mic. FRA is on percentage. If you want to collect percentage, so there is credit like it's not your money. The first chairman said, I beg, you have to pay. But taxing are suffering. Really? They use your case, okay? We will conclude it for the past 3 months because they have credit note before. If we give them letter of internet, if you now raise PRN and we debited them on daily basis, financial interest will keep charging them. And one part of the liability is credit note. And they have this credit note. We saw it, but it's not in our system. And we can't give value. Yes. So let's begin to echo it at any fora at the ears of those in power. This and let us synchronize GPMIS and tax formers so that taxpayer will be happy. Thank you. Any other question, please? You follow it. After you. Get my number and text you. From 2 of my wife. Double start.
Hello? Yes. Yes, ma. Ask for the chapel. Yes, ma'am.
At what point?
You don't pay back.
They don't pay back. Yes, what are these?
How?
Good I to work.
How? Wait, now.
At what point?
At what point? You have an answer. You say they don't pay back. Somebody said they pay. Me, I agree with you. They pay back.
At what point? That's my question. At what point? Number 2, the VAT. I have a client. They buy soft drinks from 7-Up and the other one, Coca-Cola. And input tax were deducted and everything like that. But at the end of the day, we discovered that they will not remit it. And then my clients now are shopping for it. Anytime they find a tax bill or whatever, it is not there for them to claim to give you back. On one occasion they came, they said, we have to go to Coca-Cola and whatever. I said, enforcement is not in the hands of taxpayers. It's in the hands of government. Ask this on that problem.
Madam, this you are eager to ask me more.
Yes,
This question is squarely on bad notification order of 2021. Yes, I have a paper on that. Yes, government has modified items that are battable. Yes, maybe by tomorrow, technical secretary, please hire me. I will send you the bad notification order of 2021. We have 899 items that were exempted from VAT. But the focus on the bad notification order is on the place of usage, especially on water. Yes. Now VAT has shifted on water and this basic product to a place of consumption. At roadside, those that are selling water, you just buy this water, how much? 100 naira. In those days in Lagos, we buy 20 naira, 15 naira. While Abuja, they are selling 100 naira. But in transport, in those days, we buy 1,500 water when we are doing our ICA program, 700 naira. Now go to transport, a bottle of water is almost 2,500. So bad notification order has shifted concept of this is water, this is bread, this is rice, this is this. Because before, under bad act, I made mention, part 1 is on exempted food. Exempted food comprise what and what? Baby product. Now under the notification order, they introduced diapers. Baby diapers of 36 years and above is subject to VAT.
6 months.
Yes. Yes. So you know on diapers. Diapers go men way old, 80 years, 90 years, they cannot wee. You put diaper for them, it's better. Yes. So maybe after my second coming, I will still come, not coming.
Yes.
Yes, sir.
So the concept of bad notification order is on place of consumption. If a company that produces water sell it to a restaurant and you go and sit down, you eat, who send you to go to restaurant? Buy food, go and cook for your house. So in that restaurant, the amount of water you buy is better. But if you buy water from roadside, mama food, that one is not bad. So place of consumption is the focus on the VAT now. More especially the VAT notification order. Any questions, you reach me on that email or text message. Thank you.
Ideas are waiting.
Two of them.
No.
Thank you so much, sir.
I wish chance you are sorry.
I know, thank you. I want to appreciate on behalf of the executives and the general district member. I want to say thank you, sir. Thank you so much. I know that we have all them one or two links from this presentation.